If you get bills, particularly from insurance companies, that offer you the option of paying in full or paying by the month for a few months, usually 6 months or 12 months, pay close attention to how much extra they're charging you if you pay by the month. Now, a lot of people can't afford to pay the entire 6 month or 12-month premium, so they feel like they have no choice but to opt for the monthly payment plan. But I was curious what the effective interest rate would be if I went with the monthly payment plan, and I was surprised at how high that actually was. So the quick answer is going to be on a 6 month insurance policy. I'm not going to tell you which company because it doesn't matter. I think they all do this sort of thing. 6 month policy to pay by the month was going to cost me 61.27% annual interest rate. And I'm going to show you the math on that. If if the math bores you, skip ahead or just end the video. Just as long as you're paying attention to how much extra they're charging you. In my case, the bill was $646, and it would have been $729 to pay it over 6 months, and I'll show you the math there. So these are the actual numbers from my bill. Bill for 6 months, $646, or if paid monthly, $729 for an extra cost of $83. And these are the monthly payments it was going to be: the $121.53 down, then $121.50 for 4 months, and $121.47 the last month. Don't know why they moved those 3 cents around, but anyway, that's the payments they were going to charge me. So I had a choice whether to pay the $646 now or the $121.53 now, which would have left, if I did the $121.53, that would have left me owing $524.47 to be paid over the next 5 months. So with borrowing $524.47 at an annual rate of 61.27% interest, for the first month you calculate the interest by multiplying that $524.47 by the interest rate and dividing by 12, since it's only for 1 month. And that total came to $26.78 of interest to be added on the first monthly payment. So you take that $524.47, add in the interest, moving the balance to $551.25, subtract the payment I would make next month, $121.50, bringing my balance down to $429.75. And then do that over the succeeding 4 months. The interest would go down because the balance is lower. It's still that same 61.27%. And finally, on the last payment, there'd only be $5.90 of interest, but that's still that same 61.27% annual interest. Then the balance would get down to zero after that amount of time, and all those interest amounts add up to $83. So the 61.27% effective interest rate is what financing this over the 5 months would cost. Now let's say I can't afford to pay it all at once, so it might seem I have no choice. But even if I put it on a credit card with their ridiculous 24% rate, that would still save me over $50. That last payment would only have to be $68.27 on the 24% credit card.